Welcome again to Think Like an Ant. Of course, on this channel, we talk about money, how to grow your money, how to do well with money. On this episode, we want to talk about insurance. Stay tuned as we learn more. So how did insurance come about? Way back in the day with the Egyptian merchants, they used to travel long distances to carry goods, either by sea or by land, or mostly by sea. So imagine that the merchant is moving goods from Egypt, say, all the way to a part of Asia. A lot of things can happen on the road or on the high seas. You could lose your cargo, you could be robbed, some of the cargo could be damaged. So over time, they learned to create some sort of insurance product so that in the event that anything happens to the goods by the time they arrived, there was a system to pay for it. What does this mean for insurance? It basically means that insurance is money that you put aside for something in the event that the unexpected or what you didn't plan happens. This way, it can cover the loss. So what are the kinds of insurance? We have car insurance, home insurance, health insurance, travel insurance, life insurance. There are many others. Now, let's talk about insurance principles. So let's say you have a television in your house, nice television that you bought, and you are going to work. Now you happen to live alone, or the entire family is going to work or going to school at the same time. So when you left the house, you locked up, you left your TV in, and you left for work. You come back in the evening, and the owner has come for the TV. What do? Guess what? If you had home content insurance, the insurance will pay for that lost television that was taken from your locked home. Did you know that? How does insurance work? The Ghana Road Safety Authority says that there are about 123 accidents per every 100,000 vehicles. So let's try and put that into context on a much smaller scale. Say there are 1,000 car owners who are paying 300 cedis a year towards insurance. That comes to 300,000 cedis a year for insurance. Now, based on the statistics we have, the number of drivers who are likely to have an accident in that year are less than 10. This means that 10 drivers or less will have access to a pool of more than 200,000 cedis to claim insurance on. Today, third-party insurance gives you up to 6,000 cedis for most institutions in property damage and even more in case that there is an accident that a human is involved in. Insurance is allowing a driver to drive knowing that in the event that something goes wrong, unlikely as it may be, he can get cover and have money to be able to cover the expenses where necessary. Now let's take smartphone screens. Many of us have smartphones. Actually, the statistics show that more than 50% of Ghanaians have smartphones. When you leave your house, you don't plan to crack your screen. When you are using your smartphone, you have no intention to drop it. More so, nobody leaves the house planning that they will not come back with their smartphone because somebody has picked it off them. So what if you covered your phone with a screen protector? You probably have. Maybe you also have a protector for your phone itself. If you can spend 100 cedis on a screen protector, why not spend that amount of money or a little more on screen insurance? So that when you break your screen is covered. Why not spend that money on insuring the things that are valuable to you just in case something happened to them? You may say, oh, it's never happened to me before. But guess what? You know somebody it's happened to. If you know somebody it's happened to, then you can tell that person that they should consider taking on phone insurance to protect themselves. In a nutshell, nobody plans to fall sick when they wake up in the morning. Nobody plans that they will end up no longer among the living when they are going through their day. Nobody plans that someone will meet them by the road with a cutlass on an okada and tell them to bring everything that's with them. It's not the plan for each of us every day. But the truth is, these things happen. What insurance does for you is that in the unlikely event that it does happen, there is a pool of money that can pay for what you have lost. So you don't have to cough up money to go and pay medical bills that you don't have, or you don't have to cough up money to go and pay for a funeral that you haven't planned for, Or you don't have to cough up money to buy a phone you just bought 3 days ago because you may not have it. This is what insurance does for you. Consider insurance because it's valuable for you. Once again, this is Think Like an Ant. We talk about money and how to make your money work for you. Have a good one.